Welcome back to the Fancy Yancy Financial Capital Church, where no, it's not named after a Negro. We're just using that name because that name's been in business for a long time. And after these 6 years, that's not a friend's name. So for anybody that's still looking for affirmation, go elsewhere. But anyway, we are here to go over today's sermon, where again, this is not to be construed as investment advice, but if you do want to invest, please look down below in the summary section where you can donate, where your investment donation will reap you dividends upon dividends in heaven. All right, here's today, April 2nd, Tuesday's market recap. Basically me reading off Zero Hedge because they do a pretty good job. Now, Bitcoin blasts off. We'll go over that later. Bonds and bullion bounce, but the Dow dumps on Walgreens Boots Alliance bust. Now, here's a good one. The jaws of death between bonds and stocks has never widened so fast. And we've gone over this in the last video. Let's go down to the chart of it. He has it all the way down here. And here it is. The MSCI World Index. That's your equity index there. And here's the Bloomberg Barclays Global Aggregate Government Yield. And you see that big move over there? That big, wide opening there? That's because all they're doing is printing money. Now, there's a good Kaiser Report episode that, I might play now. Or play in the next section of this. But here are the stocks going up and up and up. And that's from money printing going up and up and up. While people are selling off bonds, people are buying bonds, fleeing to safety. Now again, the last time that happened, just like we said, was right before 2008. And right before the credit crunch, and it first started in, I think it was Iceland. Gotta look that up again. And then it just spread all over the world. Because that's how credit works. So China had a big liquidity injection and a couple days ago, and I guess they kind of tapered off for today. And it's still holding steady, moving sideways. European stocks ended extended gains. FTSE moving it, and the DAX I think is, DAX is too. Still kind of moving sideways. Here's some fun today. You had some PPT action again. I think we can see it too. Close, when it was still closed. Still going down. A couple hours after the open. PPT says no. We can't let it drop that much. Let's move it back to PPT unchanged. And you had Dow going a little bit lower because Walgreens, I guess they own Boots now too, their earnings was not very good. And that's exactly what we were talking about last time, where you have an economic slowdown and a lot of companies' earnings are not going to be very good. And now that we're going to be going into reporting season again, I guess we're having a bunch of companies reporting, you're going to see plenty more. NASDAQ is up a little bit. I don't know why, probably more money printing. And transportation and small caps are down. And here it is, Walgreens Boots, accounting for most of the Dow's losses. Because they're slashing earnings guidance. You know why? Because retail is slowing along with the economy. And in fact, I'd be shocked Shocked if they didn't close a whole bunch of stores, just like everybody else. Even Walmart's closing stores. Even though they're very profitable, they're still closing stores because not every single store is profitable, and they're expecting a recession. Well, recession in mainstream media speak. You've been in a depression since 2008. You never really recovered because you got fudge data. You've been in a contraction since then. That's why everybody gets laid off every fucking day. And the yield curve moved flattened a little bit. And the dollar index rose a little bit. Now again, Chinese currency is the largest weighted currency in that basket, in that index. So I'm just going to assume they went down again because they like to devalue. Because that way they have no reason to go along with any of your crap in your trade war. Because now those tariffs mean nothing. Oh, and here's a good one. The Mexican peso dumped. Well, they should have. Because again, shutting down trade with Mexico, not a problem. You can buy Mexican produce anywhere else on earth. And closing the border also means that you bring back a lot of jobs here actually, especially in the autos manufacturing sector. So again, that would be a great idea. Okay, well, because, yeah, I don't think anybody's going to figure out that Brexit stuff yet. And overnight, something magical happened. Bitcoin and the rest of the cryptos shot up. Yeah. 2 large buyers. Wonder who it was. If anything, it was probably just the Chinese. The nice little capital injection again. Or from all the money they printed, in the last several days, weeks. Somebody just decided, all this cheap money I can borrow, I'm going to go buy a bunch of Bitcoin. Again, it's a highly volatile currency. Don't expect to see the price not fluctuate quite a bit. Ooh. And oil continues to go up higher even before the summer season. Look at that. Looks like those cutbacks are working. Another reason to invade Venezuela. And let's see here. Oh, copper. Copper is down. Nah, just a little bit. Mainly moving sideways. Dr. Copper there's a pretty good indicator. Probably just reflecting the slowdown in the economy. And here's a good point. If China's so freaking awesome, why is copper collapsing? Oh, I guess it is going down quite a bit. Now, yeah, it's just the economic slowdown. China's numbers are fudged. And China gets to have nice little liquidity injections, which devalues their currency, which makes your dollar look like it goes up, just like we went over a few seconds ago. But they still can't drive demand from the rest of the world, who is seeing a global economic slowdown. And look at that. Crude is going way higher. That looks like those cutbacks are really working. Time to invade Venezuela. And gold still manipulated. They're pushing it below 1,300. Now we should make a video on this and how this works. Now, the gold price is manipulated because the U.S. government likes to print a lot of fucking money. And that price would be skyrocketing, shooting way up there, if they didn't manipulate the price down. And which they have to do, Federal Reserve included, because they can't let it look like there's massive inflation in the dollar. And if you were to actually try to get gold physically delivered, it's going to cost you much more than $1,300 an ounce. So, they can't manipulate that, but they can manipulate the market price that's shown here with a bunch of naked shorts. But again, this is only mentioned because your dollar isn't rising. This is another indicator, but it's manipulated. And in the Bloomberg Dollar Index, it's not rising there either because China's printing a lot of money. Their money going down is different from your money appreciating. And here we are again. So a nice little signal to your credit implosion. Everybody's fleeing to safety, but all the government, the central banks, a good amount of the central banks just keep printing money. There we go. And we even got a little inflation in the Bitcoin. $5,000, so that was what? So it was 4,000 just a few days ago, or a few weeks ago. Now it's over 5,000. There's like a little 25% increase there. And again, at the real prices without manipulation, this would be just like gold because it'll show you how useless that dollar is. Because they keep printing money. Which you see right here. And what else do we have? And here it is too. What rally? Hedge fund hammers as momentum crushed. Now, here's the important part here. As a result, while stocks soared on Monday, many investors and hedge funds who had put on their popular growth deflation trade not only did not participate in the rally, actually ended up in the red. That's because they weren't buying. They weren't buying. They were printing, or the government was printing money, which you will see right here. So there aren't large institutions buying. How did this go up? Government money printing. Central bank money printing, I mean. Now, we have to keep repeating that over and over again. Because clowns still seem to think that things got better for them. No, it got worse. And here's some more stuff from Nomura. And their quant division, which is, so far has been showing the only one to be fucking useful. It's amazing. And again, here's another important part. Vol collapsing, resulting from the world shifting back to carry mode as central bank vol suppression returns with a vengeance. Money printing. Money printing. It still doesn't fix your problems. That's why you get things going on like Walgreens, because printing money doesn't make companies profitable. Never does. Never will. So, you're going to see a bunch more. Actually, you know what? I might actually go on a different suggestion from Charlie here. Miguelic. I don't know how to pronounce his name. I shouldn't butcher that. But I'm going to go ahead and say you're going to have the central bank shenanigans, and he's absolutely right. But as earnings season comes in again, for this quarter, for the first quarter, earnings reporting,